Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at Apple on the daily and weekly time frame. So in my previous video, I highlighted the potential of this being a bear flag, which would lead to further continuation to the downside. And I said if the 10-day moving average became support, that would negate it. That's what happened. So it is no longer the potential of a bear flag, in my opinion. So a strong show up by the bulls today. And the candlestick doesn't scream strength to me on the daily time frame, rejecting from the middle Bollinger Band resistance. But I'll show you on the weekly why I feel that it is significant. So we do still have a gap here at 106.80. We came 2 cents from filling it, but it's still present there, so keep that in mind. But the weekly time frame, nice bullish candlestick now to close out the week, and it's looking a lot like a bull flag. So we went from looking like a bear flag potentially on the daily to it now looking like a bull flag on the weekly. There's your flagpole, the strong move to the upside, and support and resistance lines being parallel on normal healthy consolidation is a bull flag, which would indicate continuation to the upside. So we know we have the event on September 7th. I believe that is Wednesday. So we'll need to keep an eye on that, as sell the news is usually the way it goes, and everybody knows that. So we'll see if that's going to be the case yet again. Key middle Bollinger Band resistance to be watching. Let's now look at some shorter term time frames. I want to emphasize this weekend in pretty much all my videos how important the 20-period moving average support is on every time frame. It was your guide today on Apple, and if you traded just using the 20-period moving average and nothing else, you had some good trades. So we've held it as support pre-market, bullish action, back tested it right out of the gate and held it. We can see the range tightening. We know a move is imminent. So I said if we lose a 20-period moving average support, I was live on webcam at the time, that's a bearish entry signal. We lost it, saw downside, the bulls attempted to get back, rejected, and if you made a bearish entry once that 20-period moving average support was lost, you then had 3 hours of downside in your favor with the trend. And then when the 20-period moving average becomes support, you get out as a bear, and you can even flip to a bull, and then you get that bullish run at the end of the day. So you could have traded both directions using just the 20-period moving average support, nothing else. You could have taken every single other indicator off, and if you're using just that 20-period, it would have worked out, and you might say, well, that's maybe just one day where it worked out. That's not the case. I just did a SPY video where I highlighted 3 days this week where it worked. I've got Tesla working for it today. I'm going to be making a bunch of videos this weekend and highlighting it. That's going to be the theme of the weekend, the 20-period moving average support, not only on the 5-minute, but on every time frame. Let's check the hourly here. We do have a key 200-period hourly resistance. We rejected from it. Let's zoom out and get the whole week here. So the 20-period resistance, rejecting the price, it became support. Then the bulls started showing up. 100-period resistance, rejecting the price, getting above it was bullish. And now let's zoom into today. The 200-period rejected the price. We pulled back, established support, made another attempt, and we closed right there at the end of the day. So not a convincing break above 107.70. Watch this 200-period hourly resistance into next week. If it becomes support, we'll be looking for some upside. And this is a potential cup and handle pattern on the hourly. The right side is lower than the left side. And if we consolidate and form the handle and then break out, that's a perfect cup and handle on this hourly chart. So worth keeping an eye on the hourly for that resistance level and that pattern alone. We'll see how it plays out. Have a wonderful long weekend. I will see you soon.